No one expects you to become a health insurance expert, but health insurance is something you're going to have to deal with for a lot of years. If your parents have been handling your doctor appointments and the insurance policy that helps pay for them, this may be the first time that you have to step up. There are a variety of insurance policies, ranging from those that cover the costs of doctors and hospitals to those that meet a specific need, like vision or dental coverage. When most of us talk about health insurance, however, we refer to the kind of plan that covers doctor bills, surgery, and hospital costs. Just like car or home insurance, you pick a health insurance plan and agree to pay a specific monthly rate or premium for that policy. In return, the insurance company agrees to pay a specific percentage of your medical expenses for a specific list of medical services, which are called covered services. Your new employer will probably offer you health insurance. You might have the option to pick the coverage that is best for you. There will be lots of options and lots of words you don't know. Let's talk through some of those basics. You will pay for this coverage through a payroll deduction called your premium. The premium is the monthly amount you pay to have an insurance plan. The cost will vary by the plan and level of coverage you select. Your employer will likely pay part of your premium for you. You'll then have the option to cover yourself, your spouse or partner, and your dependents. You pay your portion of the premium even if you don't use medical care that month. There are several different kinds of health insurance plans that you might be offered in your employment package. Preferred Provider Organization plans, or PPOs, cover participants within a specific hospital and physician network. PPOs will cover out-of-network costs at a reduced rate. Typically, PPOs split the cost with you after the deductible is met. Exclusive Provider Organization, or EPOs, are much like PPOs with the exception that no out-of-network charges will be covered by the plan. Although in some cases, the plan may cover out-of-network costs for emergency room visits. Health Maintenance Organizations, or HMOs, are built around a strict arrangement with participating providers in a network. If you stay within this network, usually based on where you live, coverage is often 100%. Because the providers in an HMO are under contract, premiums are usually lower, but they aren't as portable in terms of where you can go and what providers you can visit. Point of Service Plans, or POS, are a hybrid of PPOs and HMOs and allow reduced coverage of out-of-network medical services. 3 tiers of services are available. Use a contracted HMO provider and pay no copay, use an in-network PPO provider and pay a copay, or see a provider outside of the network and, after your deductible is met, split the cost by a predetermined percentage rate. High-deductible health plans, or HDHPs, are structured to provide you with tax savings. The plans themselves may be associated with an HMO or a PPO and allow you to establish what's called a health spending account, or HSA. An HSA provides you more flexibility in spending your healthcare dollars, allowing you to set aside pre-tax funds to use toward future medical expenses. Typically, HDHPs have higher deductibles than other plans, and preventive care does not count toward the deductible. Most insurance companies have negotiated discounts with doctors and facilities that are called networks. Payments by your insurance company are usually based on these discounted rates. Based on the plan you choose, you will have access to the network of doctors and hospitals which are called in-network providers. This is extremely important as you may not have coverage if you choose to use a doctor or hospital that's not in your plan's network. When you're considering different health plans, be sure to look at which providers and hospitals take that specific policy. If you want to keep specific doctors you already have, be sure to check and see which networks they're in before you decide on a health insurance plan. Because it saves the insurance company money, you're rewarded for seeking care in-network with a lower out-of-pocket cost and lower overall cost of care. On the flip side, if you choose to use an out-of-network doctor or facility, you're still covered on most plans, but the copay, coinsurance, deductible, and other benefits may be different than when staying in-network. Be sure to read the policy carefully so you know what to expect and what you might be charged for. A copayment is a fixed amount you'll pay for a medical service with the insurance company paying the remainder of the cost. For example, you may pay $25 for a visit to the doctor's office that would cost $150 if you didn't have a copay plan. After your copay, the health plan pays the balance of your charges, including lab work or x-rays. Some plans do not offer copays, but rather have all medical expenses applied to the annual deductible. After you meet the deductible amount for the year, your insurance will cover most costs and you'll pay the agreed upon remaining percentage. That's coinsurance. Coinsurance generally follows your deductible and is similar to co-payments, except it's a percentage of costs you pay rather than a fixed dollar amount. For example, if you have a plan with a $1,000 deductible and 20% coinsurance, it would work like this for a $3,000 claim. You are responsible for the first $1,000 to meet your annual deductible. You are then responsible for 20% of the remaining $2,000, so $400, and the insurance company will pay the other 80%. This cost sharing ends when you reach your out-of-pocket maximum for the year. If you need medical care, a deductible is the amount you pay for care before the insurance company starts to pay its share of the medical costs. With many plans, most expenses will be applied to your deductible. Once you meet your deductible, your insurance company begins to cover some or all of the costs of your care. Some plans have lower deductibles, like $1,000 for an individual. Others have higher deductibles, like $3,000 for an individual. If you have a spouse or children on your plan, the deductibles, premiums, and out-of-pocket maximums will be higher. Many plans are required to provide preventive services at no cost to you, even before you've met your deductible. This usually includes things like an annual physical and birth control prescriptions for women. It's important to note that even though you're required to pay 100% of the cost until you've met your deductible, you'll receive large discounts on all of your care by using an in-network provider, so make sure you don't go out of network. Out-of-pocket maximum is the worst-case scenario maximum amount you'll have to pay if you get sick. This resets each year on your policy renewal. For example, if your plan has a $3,000 out-of-pocket maximum, once you pay $3,000 in deductibles, coinsurance, and co-payments, the insurance company will pay 100% for any covered care above that amount for the rest of the year. Note, however, that your premium does not count towards your out-of-pocket maximum. Knowing about the different options and terminology in health insurance can help you make an informed decision about your coverage. Hopefully, now you have a better understanding of some of the terms you'll see on your health insurance options at your job.